Hey everyone, it's Paul with another amazing, wonderful, phenomenal, incredible video with a really unusual title, right? You know, I like the number one titles. And so this week, the number one manipulated stock right now. Yeah, I mean, sounds weird, but trust me, this is good because I've been around markets for a long time. So sometimes like, you just you see something happen and then you go, this really doesn't make much sense. Like, why would the management of the company kind of like say this? Who is selling this when it's being marked down this much? And who's buying this? Like, if it's so terrible, like, why is not like, down 70%, being marked down 70%? But before I get into all of that, my usual disclaimer, which is that this video and anything that you read from me on any content platform, Twitter, Substack, are subscriptions from ATG Digital Media, which I'll tell you about somewhere in the middle of the video, not investment advice. We have not considered your personal financial assets, income, age, demographics, risk profile, none of that. So you gotta take responsibility for your money. Past performance does not mean you are guaranteed of future results. Errors, mistakes, oversights, yeah, they happen because me, my team, our awesome, incredible team, we're human beings. Sometimes we just suck. That's just the truth. And sometimes we're incredibly awesome as well. I mean, recently we just knocked out some huge gains. So, hey, but we can get things wrong. Capital loss is a likely outcome. I know it's the last thing anybody wants to hear, but hey, listen, when you put on a trade, you put on a speculation, you buy into something long term, there are no guarantees. I mean, you could lose money, and you need to know that before you enter it in thinking that, oh, I'm guaranteed of it. Nothing's bulletproof in the world, folks. Finally, the owners, contractors, employees, and associates of ATG Digital Media, which is our company, own, trade, transact in the investments that are mentioned in all of our content material, including this video. All right, no suspense for this video. All right, I'm going to be talking about this stock, ticker symbol S. This company is called Sentinel One. And you might guess what they do. Sentinel, cybersecurity. Okay. I mean, I could go into a lot about them, but essentially they're in the cybersecurity business. Some basic stats. All right. $12.85 stock price. $3.75 billion in market capitalization. Remember, the stock price is not a reflection of how big or small a company is. You tell that by the market capitalization, which is this line, your 3.75 billion. Remember, the largest company in the stock market today, Apple, at 2.7 trillion. So if you want some context, 3.75 billion is fairly small. Now, it's not as small as something that's 3 million or 300 million. 3 billion, it's not like tiny micro nano cap, but it's nowhere near the Apple and Microsofts of the world that are valued in the trillions of dollars. So in other words, this is small. And if things go right over a long term, 10x would be 30 billion, 100x would be 300 billion, 1,000 times, would get it somewhere near the Apple range, right? Yeah, which, hey, one can always dream, but 10x, 20x, I mean, completely possible from 3.75 billion. All right. Now, I've put here 2.61 billion X cash. What does that mean? Well, this company, Sentinel One, has $1.14 billion in cash. And this will all become important in a moment or two. So just bear with me. I'm going to throw all these numbers out, then give you the context and explanation after. You got $1.14 billion in cash. So I've told you that the way that we gauge whether a company is expensive or cheap is by using something called price to sales. Value investors use price to book. Some people use price to earnings. We use price to sales because we're growth investors. That's what I focus on. That's what all of the investments at ATG Digital Media, the subscriptions focus on. And if you're not growing sales, hey, your company ain't growing. Ain't growing. So we focus on sales. So based on their current market capitalization, SentinelOne trades for 7.6 times sales. But you take out the cash, I mean, it's a lot of cash, right? I mean, 1.14 billion of 3.75 is almost like a 1/3 of this company is its cash balance. Plus, they're in the cybersecurity business. In other words, they sell subscriptions, they sell licenses for cybersecurity, produces cash on an ongoing basis. So they got a lot of cash. You strip out this cash, this company is way cheaper, 5.4 times sales. All right, 5.4 times sales. And this will all become important in a moment or two. Now, if you own this stock, and this was owned in our gold tier, our gold tier at ATG Digital Media is our stock picking tier. We've got everything from nano cap all the way to sort of like the larger mid cap stocks, but it's our stock picking tier. And when I came over from Banyan Hill, we sort of like took, I think it was 5 different stock picking services. We want to put it into one tier, the gold tier, just so goes for $50.99 per month. But if you want to check us out, I'll tell you more in a moment. But SentinelOne, which is in our gold tier, they released their earnings. It was a couple of days ago, and the stock started to be bid down in the pre-market first by like 10-15%. And then when the market opened, woof, yeah, marked down by 35%. I like to use the word marked down because it takes some of the emotion out of of like, oh, the price is down, I'm down. The thing is that somebody is willing to accept a price that is 35% down. Now, having managed money on Wall Street, I can tell you that doesn't just magically happen. It's because some portfolio manager generally wants to get rid of their shares, and they call Goldman Sachs, they call Morgan Stanley, they call JP Morgan and say, hey, I've got whatever 20 million shares of this and I want to be out. There is no market for 20 million shares of SentinelOne in 1 minute or 1 second or even in 1 day. If you wanted to sell 20 million shares, you'd have to like drip it out over, I don't know, maybe a month. I mean, this is a fairly small company. So instead, you want to be out today, well, then you got to take a haircut. And that's when you see these big drops in prices. So then, the media, of course, has no real understanding of what happens behind the scenes on Wall Street about these deals that are happening between a portfolio manager that needs liquidity today or just wants out of the stock, and how the market works, how the stock market works. In other words, it works like any other market. If you come to sell a large amount of stock that doesn't trade all that much every day, well, then you have to take a significantly lower price. That is true in the real estate market. That's true in the vegetable market. That's true anywhere. The moment you have a large quantity that you want sold, you've got to accept whatever somebody is willing to give you. Now, there is no explanation provided for this. When you go look on whatever technical analysis app you're using, TradingView, or you go to any of the usual places, no, you'll never get that explanation. But most of the time, that's really the reason for it. In other words, there's different time frames in the market. Some people are very short term, some people are very, much more long term, some people are in between. But the short term folks, they set prices. So if someone made a bet on SentinelOne's earnings and took a fairly large bet and they want out, they're like, hey, our business is betting on earnings. Yeah, 35%, if that's what it is, they'll lock their losses and move on. So anyway, the official story, if you read CNBC or Bloomberg or anything, is that SentinelOne, they missed their earnings and guidance, but just understand that this company in this quarter, they grew their sales by 70%. 70%. Yeah, 70%. That's just a big, big number, 70%. Then their annual recurring revenue, in other words, they're a subscription-based business, right? I mean, if you've got a subscription to any of your cybersecurity apps, you pay monthly, or you might pay annually, grew by 75%. So in other words, this is not a business that is in collapse mode. Yeah, I mean, the growth did slow from the previous quarter where it was 100%. But let's just go into a little bit of what the company is saying, which is that if you go and read, sorry, I'm a bit of a mess here with the slides, but if you go and read what the company is saying, they say that they were seeing smaller deal sizes, longer sales cycles, and lower pipeline conversion. And this is a very interesting thing to begin with, which is that generally speaking, when a company disappoints on earnings, they usually defend themselves. They don't tell you why everything's going on. So that's a little bit unusual. In other words, generally, companies will not talk down their stock. They will generally talk up their stock, even if they're having troubles, or they'll kind of ignore it. So this is it's a kind of like a tell that something is going on here. Like this is not all upfront. Also, if you think about cybersecurity, which is has this market dramatically changed? For them to be seeing smaller deal sizes, if their cybersecurity technology was useful for mid-sized companies, large-sized companies, did something magically happen? Was there some cybersecurity event where I don't know, the chip company said, oh, we've been able to program this in, we're not going to need cybersecurity? Nothing has happened. So I don't know, this just doesn't really meet the smell test for me. Longer sales cycle. Suddenly a longer sales cycle? Really? Cybersecurity is something that I will tell you that any company, they know that this is a clear and present, ever-present threat. Yeah, whatever sales cycle was there before, did it suddenly change? Again, yeah, I don't know. Let me meet my smell test. And lower pipeline conversion. Yeah, I mean, again, it's possible that maybe the economic environment has dramatically shifted. Maybe people worried about the debt ceiling and stopped considering cybersecurity software. Really, I just don't think that's the place where people are going to cut. I think there's a lot of places where people might cut, but if you were considering SentinelOne software, it would be because you needed it. And yeah, like I said, it's very unusual for a company to talk its stock down. But let's just go into the growth of cybersecurity, which is and Dean's going to put up a couple of slides here. McKinsey, this article is from a few years ago, laid out why cybersecurity is a $2 trillion opportunity. And then a more recent article by a research company forecasts cybersecurity growth of 13.8%, which is pretty hefty, 13.8%. Remember, most economies are barely growing. So 13.8% is a very substantial rate of growth. But even more importantly, the industry is growing at 13.8%. SentinelOne just delivered 70% growth. 70. That's what, 5x the industry growth, right? 5x, right? And the stock crashed by 35%. All right, okay. Right, before I go on, I know, rude interruption, but hey, put up with this, all right? I'll get through it quickly. It's an ad for the services for my company, ATGdigital.media. That's the actual website. Paid subscriptions start at $9.99 per month. We focus on innovation and growth stocks and crypto. And for $9.99 a month, and truthfully, for all of the other tiers, we've got a total of 4 different tiers of subscription services, but I'm just going to mention the $9.99 one. You get stock crypto picks, updates, market strategy, and commentary. And if you want to sort of just get a taste for it and try it, not quite try it out because we're not actually giving you access to the subscription, but if you want to read about kind of like what we focus on, how we cover the markets, you can go to my Substack, paulmampilli.substack.com, and read for free. There is no charge for reading the Substack. All right, so let's just look at Sentinel-1 and then sort of let's like compare it. Like, I just mentioned that the industry is growing at like, let's say 14%, right? Now we're going to do some peers that are actually still growing quite fast. Sentinel-1 is a fairly new company. It's come to the market about 2 years ago, and they've had 9 quarters of growth since then. 7 have been over 100%. So this was very fast growing. So that matters because, like, hey, if you've been growing for 9 quarters in a row, the base or the starting point or the denominator in jargon, starts to get higher, and it becomes hard to generate higher and higher percentage growth. So it's very normal that as a company's revenue has gone through 4 or 5 quarters of very high growth, like they have 7 quarters of 100% growth, that you will see some slowing in the future quarters. And growth investors know this, they understand this. So this 70% or next quarter, if it's 60 or 65, would not be a disappointment, and it not be something that would freak people out and make them throw out this stock and take 35% lower. So again, it just smells of manipulation, smells of something that is going on that will eventually show itself. Right now we just have to guess at it. What about estimates? All right, so Sentinel-1, their financial year is a little bit funky, so that's why it's 2024, not 2023. 42% growth, again, more than double the industry forecast. And then for next year, this is 2025, because their financial year is funky, it's 33%, which is again almost double the industry level growth. What about comparing it like to their like sort of like peers, right? Or the leaders in the business? Palo Alto Networks, which is arguably the leader of the cybersecurity sort of sector, they have growth of 25.4% and 21, almost 22% in 2024. CyberArk, which is another peer, 23%, and yeah, 23% for both years. And they trade for 11 and 9 times. And remember, Sentinel-1, you strip out the cash, growing at, let's say, let's like say that, they grow at 40% for the next couple of years on average. Yeah, I mean, it's almost double the growth of these companies, and it trades for about half the price to sales ratio. So in other words, you're getting double the growth at half the price. Yeah, and this stock is being like sold for 35% lower. Just feels like something is going on in the background that we are not being told. But you can bet the management of the company knows, you can bet the investment banks know, and I'm sure some select number of people know as well. So here's my view on why I call this my #1 manipulated stock in the market right now. There's something going on back there. I mean, it's part of it's a sixth sense from having been in the markets for a long time. And you just look at something, you look at the facts, you look at like, all the noise and the signal going around, you got something's just not right here. And you know what? We actually put a trade on in our platinum tier, which is our options trading tier, the day that it crashed by 35%. So what could it be? Well, the most like reasonable explanation, non-conspiracy, non-manipulation explanation is that it's a kind of newish stock. It's only been around for about a couple of years, so it doesn't have a lot of analyst coverage. And so the people who own it don't really understand it very well, and they are quote unquote weak hands and willing to just sell it out. That would be true even for professional investors. They're not seasoned in the stock, and so they're just willing to sell, because they're like, oh, growth is slowing. So that's the most non-conspiracy, non-manipulation response. Now we get into some of the more spicier stuff, which is that an investment bank is trying to quote unquote capture the float. The float is simply a fancy jargony word for the shares of the company that are trading. Remember, I mean, the shares of a company are held sometimes by hedge funds, mutual funds, index funds, etc. But to do a takeover, you need to, like let's say if one company wants to buy another, they want to feel fairly certain that if they go to make a bid, that they have a good shot of making it. In other words, you have to kind of like almost have control of the company. And so investment banks have to acquire all of that, and say, hey, if you bought the company, we can actually like deliver this to you because we've got this. Of course, they don't tell anybody that, but that they've got the float ahead of time. So then all that they have to really do is now persuade the remaining, whatever, 20 or 30% of people that hold the stock to sell it at the acquisition price. And so there are rules in the market, laws, etc., that kind of like can force you to kind of like accept the price. So is somebody trying to buy SentinelOne because they've got a ton of cash, because they're fast growing, because they've got great technology that people want? I don't know, but something's going on. And this is one thing that I've seen. Like if you study chart patterns, you'll see before a takeover, oftentimes there's a big, like a kind of like a, like a waterfall where, some event came, people, sold stock in a panic, and then whatever it is, 3 months later, 6 months later, oh, magically, there's a takeover 50% higher, 70% higher, whatever it is. And then, of course, you regret selling it at the low point. Finally, it could also be that the management has looked at all the numbers that are sitting out there by analysts and are like, whoa, the numbers are way too high and we need to reset the bar. We need to reset the bar, bring them all down so that we can beat the expectations and the analyst estimates for later on in 2023 and early 2024. Remember, the earnings estimate forecast guidance game, if you will, is played by analysts and managements. And the analysts have their own sort of agenda that they are putting out, and the managements have their own agenda. And you might think that these two parties have nothing to do with each other. The thing is, like, there's a very active back and forth that goes on. Managements are constantly trying to push down expectations, or sort of like give like just the right kind of like guidance without, of course, violating any laws, causing any problems, but where they can benefit from it in some way. And analysts are, of course, they have their own sort of like audience of whether it be the hedge funds that they're responsible to, their investment banking operation, which technically they're not supposed to be in touch with. But the reality is that, listen, I mean, of course they have to be mindful of all of these things. So the guidance game, the earnings estimate, and expectations game, this is all like done, and perhaps that's what's going on. Whatever it is, we'll find out in the next 3 to 6 months. Now, if it's just number one, well, it looks fairly cheap, and now the expectations are set in the market for really fairly low numbers, as I've laid out. Compared to their peers, it's cheap. Compared to the industry, they're growing faster. If it's a takeover, well, hey, we'll just wake up one day and you'll say SentinelOne being acquired by, maybe it's Palo Alto, maybe it's somebody else. Or somewhere in the third or fourth quarter of this year or early next year, they're like, SentinelOne, beat the numbers. They crushed it, up 100% relative to expectations. And so that's the way this story then might end. How will it actually come out? Well, if you subscribe to ATG Digital Media, we'll make sure to let you know, and we may even report on it in my Substack. So check us out at atgdigital.media or my Substack. And hey, give us a thumbs up, subscribe to the channel. Thank you for watching. This is Paul saying bye.